The housing market right now consists of high mortgages, expensive homes, and low inventory in many areas. But are zero-down mortgages the answer? Some say they come eerily close to the loans that caused markets to crash in 2008. The policy is designed to help homebuyers who can't afford that initial payment, but it could come back to haunt you if you want to move or refinance. People who opt for zero-down mortgages rely on a good economy and trust that their home's value will actually increase. So let's bring in an expert here. I'd like to welcome in Lance Lambert, co-founder and editor-in-chief of ResiClub. Lance, thank you so much for your time. Before we get into the pros and cons, explain how this type of mortgage actually works in real life.
Yeah, so we just passed through the fastest ever deterioration in housing affordability. And that'll happen when you have home prices overheat during the pandemic boom, followed by a mortgage rate shock from 3% to 4% to 5% to 6% to 7%. And so the buyers are looking for some affordability improvements. And so one of the things that we're seeing out there is home builders are doing mortgage rate buydowns. And we're also seeing some of the lenders who are really hungry to get some of that, get more mortgages issued, do zero-down mortgages. And a part of this is really just kind of entice interest from would-be sellers to kind of pull them off the sidelines, because not everybody's going to qualify for these. But we will see more of these done. And one thing to remember that's a difference between today and the 2005, 2006 market is we had a lot of qualified mortgage rules passed from 2005 and then 2010. And so even if somebody does a 0% down, they still have to meet strict debt to income ratios in terms of what their debt payment would be relative to their income. And another thing is right now, the biggest issue isn't necessarily the down payments. It's really those monthly payments. That's the bigger issue. And so doing 0% down doesn't really necessarily pull that many buyers back into the market, because the thing that's keeping them sidelined is they can't afford that monthly payment. And these 0% mortgages actually do nothing for that. In fact, it makes it a little bit higher, given they're putting less down.
Well, that's perfect for my next question, because I know we're talking about it. I've seen some articles on this, but is the zero-down mortgage actually making a comeback, would you say?
I wouldn't say it's a boom. It could be a trickle upwards, but I wouldn't say it's a huge resurgence. And, most buyers now are still putting down 5 to 10, and then some markets, still have to do closer to the 20. And one thing we are actually seeing is that more people are putting money down. Right now, 1 in 3 purchases, this is a multi-decade high, are all cash. And that's not because there's a huge flood of investors into the market right now. What it is when somebody sells because rates are so high, they're like, you know what, instead of putting that into stocks, maybe I'll just put that right into the home, given that rates are 7%. So we are seeing more equity roll over, but that really is only helpful for the older crowd that has that equity built. Right. And so right now, 1 in 3 are cash purchases, all cash.
Who is the ideal candidate for this type of mortgage, this zero-down mortgage?
Yeah, the person that they're trying to attract is that entry-level buyer. But again, for them, the biggest issue isn't the down payment necessarily, and it's that monthly payment. The fact that these mortgage rates going from 3% to 7% mean that a lot of homes that would have had a $2,000 mortgage are now $3,300. And if you put zero down, yeah, you had to bring less for close, but your monthly payment then could be $3,600. So it's not really moving the needle that much for would-be buyers.
Well, my last question for you, Lance, what would you suggest for people who want to own a home, don't want this type of mortgage, but really feel discouraged by just the current state of our housing market?
Yeah, that's a really tough one to answer, because I'm not sure where home prices are going to go, not sure where mortgage rates are going to go. But the one variable in terms of housing affordability that people control is income. And so it might sound a little shrewd to say it, but having more money, saving more money, and making more money, those are things that you can personally do to move the needle a little bit for yourself. Whereas home prices and mortgage rates, people don't necessarily control those.
Yeah, hopefully we'll see some type of relief on the horizon. Lance Lambert, thank you. Thank you for watching. Go to newsnationnow.com to find News Nation on your television provider. And don't forget to click the red subscribe button below to get more of News Nation's fact-driven, unbiased coverage.